The economy is staying stagnant. A new report shows a meager growth of just 1% this spring. Even experts are worried the country could be at risk for another recession. There's a lot of uncertainty out there, and that's not helping consumer confidence or investors. Joining me tonight is Kereakos Zuras, former financial advisor to President George W. Bush. So what needs to be done to get the economy moving again?
Well, the first thing we need to do is we need to get this administration on board with keeping the tax cuts that are in place now continue to go on. And we need to start helping out small business, okay? Because small business is the prosperity for America's future. It's the engine of America's economy. It produces over 50% of the American output, and 7 out of 10 jobs are created through small business. And right now, with all the restrictions and the enforcements and guidelines that are being placed on small business, it's retarding the growth. It's actually choking the growth of small business. So small business owners are afraid to move forward. They're not investing in their business. They don't know which way we're going. And it's keeping people unemployed. We've got 14.5 million people unemployed, and the jobless rate is 9.1%. And it's effectively over 15 if we consider the underemployment as well. So
80% of what you've said, you'll get agreement from a lot of people. But there's so many people on both sides of the aisle who still say, you know, these Bush tax cuts, we've got to get revenue from someplace. Warren Buffett, he may be a minority in the billionaire club, but he says, go ahead, tax me some more. You've got to raise revenue at some point if we're going to have so many cuts. The Obama administration says it's not fair to not ask people to chip in a little bit more at the high spectrum of the tax bracket. Why not?
Here's the problem I have with that. First of all, Warren Buffett, when the Dodd-Frank bill came out, was not real happy. Okay, that he was going to jump to a 35%. So he's now saying two opposite things. Secondly, if we get people working again, that will take care of the problem that we have of collecting revenues. So we really need to do things to jumpstart the economy and get people back to work. As far as paying their fair share, the Obama administration seems to think that big corporations should pay more. I mean, this isn't a Robin Hood mentality where you take from somebody that has a whole lot and give it to others. We need to get everybody back to work. I mean, there's people out there that want to work that can't. Let's find the solutions to get the job growth here. And you know what else is ridiculous? The CEO of GE is now on the Presidential Advisory Council for Small Business.
Didn't pay taxes.
And not only that, but he's going to outsource jobs to China, and we're dealing with sensitive, top secret military information. So why don't we just go ahead and give everything to them? Look, we've got to get jobs back here in the United States.
Exactly.
We've got to lower the corporate tax rate from 35% to something that's reasonable. So not only that American businesses want to stay here, but we'll also be inviting other countries to come into the United States and want to do business. That's where we need to start.
Can you add a carrot to the stick and tell these big companies, we'll give you the incentives, but you've got to do your business and hire in America? Because all of these job creators are creating jobs, but so many of them aren't here. Well, Public Service of New Mexico, for example. There's a lot of companies that won't admit it, but they're hiring people. And
sure, and what we need to do is we need to put something in place that we're going to give you the breaks, we're going to give you the reasons but if you deviate and you go outside of here, you'll be punished. There'll be a higher tax rate or some type of penalty to pay. But we need to incentivize them to stay here first, because we've done everything to drive them away. Okay, foreign labor is cheap compared to here in the United States. So a lot of these companies are leaving for that reason. But if we change things around, they'll want to stay here. That's the way to do it.
Did the downgrade hurt?
The downgrade, first of all, we deserve the downgrade. Okay, we're spending $1.5 trillion more than we take in. Our spending is off the charts. S&P did what they did. They graded us on our performance, and our performance is pathetic. We spend too much. There's so much fat in government programs. We need to modify the programs that we need, and we need to get rid of the ones that we don't need. And there's a whole lot we don't need. So did it hurt? I think in the beginning, but the stock market's coming back up again. I think the biggest concern is the foreign markets right now, because you have a lot of the European markets on the brink of collapse right now, and that's affecting us as well. But look, we're a strong nation. We have a big economy, and people are still going to invest in the United States.
Real quick before we leave, 401ks, should we just sit on them for the time being, panic? I mean, there's so many things we could do. What should we do about 401ks?
You stay put. Look, our stock market's going to come back. The United States is a strong economy. We're just going through some bumps right now. Stay put, stay tight, and invest in strong companies that have been around for a while. The tried and true, and you'll be good.
Kereakos Zuras, our guest on Capital Insider. Thanks for your insight tonight.